Welcome back, folks. So we're going to be doing another quick review here. I'm going to try to get through it pretty quick. I'm still not feeling too well. So, daily chart dollar index. We were looking for a higher high, and we got that here. And this is still a potential run, even though we failed to get to it today. I'm not convinced that we're done trying to reach for that yet. So, I have a very soft bias for a higher dollar. Euro dollar, we were looking for these relative equal lows. We pierced that today. I know it doesn't look like it's done so, but it has. Take a look at that. Using the inversion fair value gap, we trade up into consequent encroachment, which is this level here. So we hit that, sold off, and then dug into this sell side. I think it would be more likely to expect a deeper run below these lows, which is the opposite of what we see, or in it, what I'm expecting rather, for another higher high on the dollar index. And that would be another lower low for euro. 4-hour chart. Here you can see the relative equal lows just pierced it here. Just really a very difficult range to trade in. So again, I feel for you if you're in the Forex asset class right now. British pound, just to toss us in here, you can see this thing is a mess too. Can't get out of its range. And this is what we've been seeing for the whole entire month of August. So you want to trade in the summer months and try to get a funded account challenge passed? And good luck. That's why I tell you, don't do it. Wait until the fall. Okay. All right. S&P on the left-hand side daily chart. I mentioned that we would likely drop into this gap here. I did not have the lines on it, but I did point to it last night, and I did mention that we would certainly get to this one here on NASDAQ. We did get to it and through it up into the bearish order block, the opening price here, extend that through. So what you see, at one point traded all the way up to the bearish order block and then closed on the day with a lower close than its opening. Much in the same vein that we saw here for S&P. And again, what I want to see is, do we start to roll over here and make a run for the sell side here? Okay. And this sell side liquidity pool on the S&P would be where my focus would be. Hourly chart on the S&P. This is that inefficiency on the daily chart. Okay, let me take you back up to the daily so that we can follow along. This candle's high, this candle's low, the respective levels here. So it's these two red levels that makes this fair value gap on the daily chart I mentioned last night. This fair value gap is for the NASDAQ. I did not include the order block level here. I added that today. All right, buy side taken. Look at the bodies respecting the lower level of that daily fair value gap. Then we had the market trade lower, gravitate back towards the consequent encroachment of the inefficiency on the daily chart. Trade down to the low of the inefficiency, just outside of it, and then consolidated inside of that range. Daily bearish order block, we traded outside of the inefficiency. This is the high and the low of its respective daily fair value gap. And we had sell side here, so we ran up, broke lower, consequent encroachment, which is midpoint between this high and this low on the daily fair value gap. That's what these two levels are. Consequent encroachment is half of that. And we sold off, and now we're consolidating. 15-minute time frame. You can see how we traded up in the S&P into the low of the daily fair value gap we were expecting to be traded to last night. For today's trading, the market broke lower and traded all the way down to the low, of the daily inefficiency. Just a real sloppy afternoon, if you were to ask me. On the NASDAQ, you see it trade up into the bearish order block, so we're really at a premium on this one. And we have relative equal lows down here where sell side would be residing. We broke lower. We'll look at a smaller fair value gap in here on the lower time frames. We broke lower, breakaway gap, unable to get back up into this area here. Working off of a breaker, high, low, higher high. Consolidation, breaks lower, attacks the sell side. 5-minute chart, again, S&P digs into that daily fair value gap, breaks lower, consolidation, breaks again, and we have a nice little fair value gap there, trades up into it, and then displacement lower. Look at the bodies respecting the inefficiency here on the sell side imbalance, buy side inefficiency. That candle's low, there's your bodies. The wicks do the damage. Breaks lower, the consequent encroachment, consolidation, rather sloppy, and digs down into the low of the inefficiency from the daily chart. NASDAQ. You can see we trade up into the bearish order block here, which is above the daily inefficiencies high. Short-term low, displacement, fair value gap. This is model 2022. Sell short, wait for displacement, attack this low here. It does, creates another inefficiency here, but what is it doing? Trading inside of this one, the high, the low. Consequent encroachment, failed, break lower. Where's sell side? Right there. Breaks lower, creates a fair value gap there, trades up into it, and then makes a lower low, and then consolidates into the close. Appreciate your patience with me while I'm recuperating, and if I'm able, I will obviously chat with you on Twitter tomorrow and do another review if it's possible. So I'll talk to you then. Be safe.